Hello there. Welcome to Speaking of Business. I'm your host, Nancy Boyle. Today we've got a great show. We're going to be talking about money and how to get some from the U.S. Small Business Administration. So joining me are Veronica Wallace, who's the lead lender relations specialist, and Ralph Ross, the deputy district director of the SBA. So welcome.
Thank you.
Thank you.
Ronnie, I'm going to start with you, and why don't you tell us a little bit about what the SBA does and what you do at the SBA, and then we're going to talk about some of the new programs that are available.
Okay. The Small Business Administration's mission is to provide assistance to small business owners as well as new business owners. We have a variety of programs and services that we offer. Our primary one is the financial assistance program, but we also can assist small business owners if they want to do business with the federal government. We have a procurement division that does that. If someone needs technical assistance or they want to start a business, need a business plan, don't know where to start, we have our resource partners, SCORE, Small Business Development Center, who are a great help to us and the small business owners. And then we have disaster assistance. Mm-hmm. We hate that word, but you know, it does happen.
But it is what it is. Yeah.
But it is a big help to small business owners as well as non-business owners. Renters, if they have been impacted by a federal declared disaster, then we have a disaster team who can come in and assist with small interest rate loans. That's really helpful to them.
Excellent. Okay. Ralph, why don't you talk a little bit about your regular loan program, 7A, 504, that kind of thing?
Essentially, there's a range of when I say applications, we call them deals. There's a range of deals from really weak deals where we've got a borrower that really doesn't have any money to invest in the business. They really don't know what they're doing. It may not be a very good business idea. On the other end, we've got really strong deals. We've got a lot of collateral. We've got an experienced entrepreneur who understands the business that they're in. Maybe we've got a business that's already generating profit, and we can look back and see how much money they're making, and there's what we call an equity injection. There's money for the borrower to invest. I mean, on this side, there are the really strong deals. Now, what we find is that the weak deals, nobody's going to want to make them. I mean, mm-hmm. No, even with or
Sure.
without the SBA, we're not going to make those loans. We're not doing anybody any favors by making those loans. The really strong deals, the banks will probably make on their own. I mean, that's great that we've got this end of the spectrum happening, but where the SBA focuses is on the middle. And what we find is in the middle, there are some projects that are well worth doing, but the banks find them a little too risky. You know, I heard a bank underwriter tell me about this one time, that if they want 5 things, if we've got 1 or 2, we won't even think about it. If we've got all 5, the bank will just make the loan on its own. If it's 3 or 4 things that they've got, meaning, you know, collateral, cash flow, equity injection, all these things they need for a deal, if they've got 3 or 4, they'll consider it if the SBA guarantees it. So what we do is take some of the risk from the bank. We guarantee loans for the bank. And what we find is that encourages the banks to do more startups and do more expansions and take more risk. What we find is there's a lot of job creation that happens when you start new companies.
Sure.
And when you expand existing companies. There's job creation and there's innovation. And these are both really good things to have happen in the economy. Now, roughly, even when we take these middle deals, on the whole, if you go back 10 years, 1 out of 20 of those deals will fail. So we're still 19 of 20 of those deals are going to be performing loans. Mm-hmm. But we believe that by taking that risk in the middle, we can encourage a lot of worthwhile new economic activity.
Okay. Ronnie, if I were sitting in the audience and I had a business, whether I was starting it or whether I was expanding it, and I'm listening to the show today and I'm going, oh, I need an SBA loan. Do I come directly to SBA, or how does that, give us a quick overview of the process.
Okay. The first thing that we tell small business owners, even existing as well, and especially for a startup business, you must have a business plan.
Okay.
Okay. The banks are not going to want to talk to you unless you have that. So we have resource partners who can help with that. Mm-hmm. So once that business plan is prepared, then you would go to a bank. We prefer that you go to your bank of account because you already have a relationship with them, or the small business owner does.
Okay.
And if for some reason that particular bank cannot assist, but they're not being turned down for credit, okay, then we suggest that they go to other banks. And if you don't know which banks to go to, we have a list that they can always call us, and we could refer them to several, within the county or
okay,
wherever. And if that bank looks at that business plan, feels that that's a strong credit, but for some reason they cannot take on all that risk. The risk could be it's a startup business, no track record. Mm-hmm. They don't have enough collateral. It could be they need a longer term than what the bank can normally allow on a deal, or they just it's a type of business.
Okay.
So then the bank will then submit the application package to the SBA. Our processing center in California will review it, get back to the bank with an answer. If it's approved, then the bank, of course, closes it, disperses the money, and they just service the loan just like they do any other loan in-house.
Okay, now
within our guidelines.
Assuming that the business plan is well written and the bank has all the information they need, mm-hmm, what's a general time frame from when that package is submitted to when the person would get their money?
If the application package is complete when
mm-hmm,
it goes to the processing center,
mm-hmm,
it all depends how it's processed. If it's what we call our preferred lenders, mm-hmm, well, they get a faster turnaround time because they're so used to doing those loans. It could be within a 24-hour period.
Oh, wow, that fast.
Preferred, yeah.
Right, okay.
And then if it's done under our certified program, that's the lenders who've been in the program, but they just really want some tweaking on the application package when we look at it, mm-hmm, then that could be within 3 days. The usual process, if the center is up to speed, they're fully staffed, depending on the loan volume, it could be anywhere from 5 to 7 days.
Well, that's not bad because
that's if everything's complete now.
Right. Well, assuming that you got all your ducks in a row to
Right.
begin with, because I know in the past, and this is going back a number of years, you'd hear 30 to 60 days sometimes. So that's good news. That's really good news.
It can still take time. I mean, commercial loans have a lot of moving parts, and they're going to be different than a car loan or
Sure.
even a home loan. Because one of the things we're looking at is a business plan, and we're looking at cash flow, and it's an analysis that requires the consideration of more information than normal. Mm-hmm. So sometimes the amount of information that has to go from the borrower to the bank will take some time.
Yes.
But once the bank gets it, they get an answer from us. I know last week our loan processing center was running a 5-day backlog, so they get an answer from us in 5 days.
Well, that's pretty good because I think most people are, like I said, used to a 30 to 60 day. In some cases, when there's, like you said, a lot of moving parts and you've got to do a lot of, there's questions that are being asked, you got to provide documentation, sometimes it takes longer.
It's much faster than everyone suspects. There are only a couple of things that will slow us down. If we've got a borrower with some sort of criminal history,
Okay.
We sometimes, I mean, I can sign off on youthful indiscretions
Yeah.
here in Jacksonville. If we get into any kind of serious criminal background, a lot of times we can still make the loan, but we just have to get it cleared in Washington.
So it just takes a little bit
We'll
longer.
lose a month on that.
Yeah.
The other one is if we've got environmentally suspect property in here. If it might be an old dry cleaner, it might be an old convenience store with possible leaking tanks, we're probably going to slow down and do an investigation on what the environmental implications are for a loan. But beyond that, I mean, those are the only really two things that slow us down at all.
And sometimes we may get an application in that somebody's not a U.S. citizen. That may take a little while because it has to be verified.
Okay.
But you know, when our training, we try to let our lenders know these are the issues that can slow up the process. So get that stuff in ahead of time, and then it's all there when your application goes to the center. You basically got your package complete. And like Ralph says, the environmentals, things like that at the point of closing, that could slow it up.
Well, but still, it sounds like it's gotten to be a lot more efficient.
We're doing hundreds of these a year. I think our best year we did 2,000 of these just in our counties. So we close a lot of deals.
Yeah, I know you do. Well, let's talk about some of the new stuff because, you know, over the last couple of years, there have been a lot of efforts made at the federal level to stimulate the economy. And in the past, we've talked about some of those programs that were implemented a year or even 2 years ago. But there's some new stuff coming out. So let's talk about that. You want to start that discussion?
Well, recently we have some temporary programs in place.
Okay.
One of them is the dealer floor plan. It's just been instituted. It is a maximum loan size of $5 million and a minimum of $500,000. It is used to purchase any type of inventory that's titled, cars, boats, RVs, that type thing.
Okay.
That program will run through September 30th of 2013.
Okay, so we've got about 2 years.
This is another attempt to stimulate the economy. I mean, what we found back in the depths of the recession was that not only was the auto industry in trouble, the auto dealers were in trouble. And their traditional sources of financing just dried up. And it's very complex financing, but we're beginning to understand it now. We're signing up some banks that want to do it, and that's an area where we may be able to help out. I mean, if we get Detroit turned around, they still need dealers to market these cars.
Sure, absolutely.
And the same thing with boats. I mean, the boat industry has just been devastated with high gasoline and a deep recession. That's another kind of inventory. This applies to motorcycles, and recreational vehicles have been impacted, and all of these things we're hoping to kind of keep the money moving that drives these industries. The jobs bill permanently raised our upper limit on lending from $2 million to $5 million.
Oh, wow, okay.
And we are just beginning to see the effects of this. What we have are serial entrepreneurs. You know, a lot of people, an example in town is I just had dinner at Zaxby's. You know, I don't want to give, I don't want to make endorsements here. The people that we funded, I think, did 2 of them. We were then built 2 of these Zaxby's. They were then capped out on SBA eligibility. When we raised the limit to $5 million, they built another one, and that's 35 jobs.
I was going to say, and there's a number of jobs attached to that, and I didn't know it was 35, but that's a nice little business, and that's 35 people who are now working and able to purchase other products and to pay their rent or their mortgage and buy their gas.
So we're finding that with things like if the hotel business ever turns around. I mean, it's hard to find a hotel owner who just owns one hotel. It seems like they all own a few. So that $5 million cap will help us with these, we call them serial entrepreneurs. Now, our average size loan really only runs, for a while there, it was running just $100,000 per loan.
Okay.
Last year that went up to 300,000. So far this year it's running at 400,000.
Wow.
And so even though we've raised our maximum and we're getting some interesting things done with that maximum, we still think small is beautiful. And we're still trying to get better at doing micro loans, the real small loans. Now about you're up to speed on the what do we call it now? Community Express?
Yeah. Well, as a matter of fact, the Community Express is going to expire April 30th of this year. So they have a new pilot program that will go for 3 years. It's going to expire in March 15th, 2014, as a matter of fact. It is a loan size of $250,000.
Or less, I take it.
Or less, yeah, maximum is $250,000. But it is going to be utilized by mission-oriented lenders, such as SBA authorized certified development companies, micro lenders, and the non-federally regulated community development financial institutions. But it's not an automatic thing. They have to actually make application to the SBA, and once they're approved, then they can start making loans to the different small businesses in the community.
So now, is the theory behind this that if I'm certified to do this, then I would make smaller loans to small businesses?
You can, as long as it doesn't exceed $250,000. So it could be like those little small Community Express loans that usually round about like $50,000. So a lender could do that, if they want to.
Okay.
It's an expedited process. That application process is streamlined, and the turnaround time I think is 5 to 10 days, a little bit longer than the standard, but it's more streamlined for the lenders to reach the those underserved markets. Primarily, that's what that's for.
Well, and for a while there, and this is going back a number of years, if you weren't looking for $150,000, the banks didn't want to talk to you. Well, if you're a small startup business and you only need 25 or 50, it was almost harder to find that than it was to find the bigger amounts. And so it's nice that there are programs that can go for the baby loans, if you will, on up to the $5 million.
And we do some wonderful economic activity, economic development with those small loans. They are hard, and I've had bankers tell me, and again, I talked earlier about how long it's going to take you to work with the bank because the bank is going to be giving a commercial loan a fairly thorough analysis.
Sure.
That analysis is expensive for the bank. I mean, they will have loan committees, they will have some smart people, some smart, fairly well-paid people studying this loan, and that's all expensive for them. And I think in order for us to get good at smaller loans, first of all, I think some of these institutions we're doing it are going to be almost by definition nonprofits, because it's hard to make much of a profit on these smaller loans. I think the people making these smaller loans are going to be doing it as part of a broader economic development mission. And even doing that, we have to scale down the amount of the analysis. We're going to have to ask for less paper. We're still going to want a business plan. We're still going to want to know that you know what you're doing.
Sure.
But we cannot produce these small loans in any kind of volume without cutting back on the amount of paper that we ask for. So it's going to be a slimmed down analysis. We had a wonderful Community Express lender out on the Panhandle who basically just wanted about 3 things. Are you in business for 2 years? Is your beacon score above 700? And I think he had like maybe one other. If he had all of 3 of those things, he'd make the loan. Now he declined 80% of what came in, but he made money on the other 20% doing real small loans. It's tricky lending to do, but it's important. And what we see is with our SCORE partners, with their small business development centers, I mean, a lot of times they are working with startup entrepreneurs who really have pretty good plans. Startups are always risky, but sometimes these plans are really strong, but they don't really require a lot of money to get them going. And having some source of these smaller loans could be very helpful.
Sure. And you hear all kinds of stories about somebody who started with their product in the trunk of their car, and down the road 5 or 10 years, they've got multiple locations and they're selling millions of dollars of volume of product or service or whatever it is. So, everybody's got to start somewhere. Nobody starts with 500 employees on day one,
What's changed is that for a while there, when residential real estate was rising in value all the time, people all of a sudden had this room between their first mortgage and the value of the house to get a second mortgage, and we were amazed by all the people who were starting little companies.
Sure.
That's where that little 50,000 would come from. Was a
friends and family network.
Was a second mortgage on that residence, and that money isn't there anymore. Since real estate collapsed. I mean, and we're actually in the same thing in commercial real estate. It's a little harder to make one of these deals work without that source of collateral there. We are still doing it. I mean, our volume in the first quarter of this year, we go by federal fiscal years, it's 3 times what it was the year before.
That's great.
So we're slowly picking up. The crash happened all at once. I mean, in September of 2008, we were scared to death. All the banks looked like they were going to go broke. We were facing the Great Depression. So it seemed to go bad all at once. The recovery has become a very slow, incremental thing, but we keep plugging away at it. We keep trying new products. We keep trying to get new things that work going, and we're gradually picking up our activity now.
Now, I've seen something about refinancing. Something I saw in the Business Journal about y'all having a program to refinance some of these balloon loans.
Yeah, on the 504 side, and that's a temporary feature too that will expire next September 27th. But small business owners, if they have a commercial mortgage, they can have it refinanced if it's going to expire, if it's going to mature on or before December 31st of 2012, okay? And it's eligible if it has been current for the last 12 months, if the proceeds were originally used for what would be eligible under the 504 program, which would be to construct, purchase, or improve a fixed asset, which in most cases is land and building. Could be machinery equipment too, but it has to be something heavy duty that has a useful life for 10 years or more, okay?
Okay.
If it fits into the program under those guidelines and the bank wants to consider it, and the certified development company will work with the bank to get that package prepared. Now, if that particular loan is associated with a federal guaranteed debt, like a 7A loan or USDA, then it would not be eligible. But if it's non-SBA or government related, then it's a possibility it could be considered.
Well, and which I think makes sense, because if you're all of a sudden coming down to the end of your term and now you have this big giant balloon payment, why not refinance it and smooth that out
And a lot of, because a lot of these properties are underwater, that's the term that's used. And so that in itself could help too. You have to have an appraisal up front, and depending on the value of that appraisal and the project itself, there are several options that a bank and the CDC can work with to possibly get that deal done.
Well, and certainly it behooves the homeowner, listen to me, the business owner, to just check it out.
Right.
You know, if you're in that situation, just check it out. What's the worst that can happen? You know, there's no change.
Right. Yeah.
See, and we're not here to take other lenders off the hook, but we understand that some of these mortgages coming due. I mean, one of the things that's happened is commercial real estate, which had substantial value 3 years ago, is maybe worth half what it was 3 years ago. And if somebody's looking at refinancing that in today's credit markets, it's going to be a dicey proposition. Or if somebody's, especially if somebody's got a loan maturing now, to try to come out and refinance. And what we're really trying to do is salvage going concerns. I mean, this isn't really a rescue mission to take banks off the hook, and it's really not a rescue mission for failing businesses. But if you've got a business that's been making all of its payments on the old financing, we're going to try our hardest to make sure that you've got the best financing we can come up with to keep you going. If you're looking at one of these maturing loans right now, so we'll see.
And then we have another program that's is strictly for preferred lenders. It's called the Small Loan Advantage.
Okay.
And it is less paperwork that would be required of the lender normally.
Okay.
And that's a permanent program. It's
Okay.
loans up to $250,000 as well, but it's felt like if they don't want to go through all that paperwork, they can use that as an alternative for lending as well. And they can use their own note and their own guarantee under that program.
Okay, so I want to make sure I'm understanding. So a preferred lender would be a bank who has a great deal of expertise in SBA loans that you've designated them with a preferred title. Okay, so they're taking on more of the processing part of things then, it sounds like.
Yeah, they're like, in essence, like they're acting as the SBA. It's their responsibility to make eligibility determinations, make sure that collateral is what it's supposed to be like. They prepare the loan authorization, and they do everything as if SBA were, doing it. And we just sort of like monitor what they do.
Okay. So, and again, for you in the audience there, if you're looking, if you need money for your business and you're thinking one of these loan programs would be great for you, start with your current bank because you have a relationship with them. But if not, they can contact the SBA office here in Jacksonville and get a list of preferred lenders.
www.sba.gov, and if you can drill back through that system under local resources, we keep a list of lenders on our website, and we've got a little asterisk on the preferred lenders. We've probably got about 10 of them in the Jacksonville area, I would think.
Okay. So are you seeing an increase then? It sounds like you're seeing an increase in the amount of loans that are being made, the number of banks that are making SBA loans. Is that fair to say?
Yes, yes. We're dealing with more banks, and the banks we're dealing with are sending us more deals. It's interesting. There's been a big turnaround in terms of who the banks are who are doing SBA lending. I mean, we're seeing the people at the top of our list. We send out a list to all the banks every 3 months saying who's doing the most loans, and the people at the top of that list are all quite different from the ones who were there a year ago, 2 years ago. So it's that market, it continues to go through a lot of changes. I wouldn't call it upheaval anymore. But a lot of banks had to be restructured. A lot of banks had to be sold to other banks. We've got out of the country institutions. I mean, down in Orlando, it's Royal Bank of Canada and Toronto Dominion.
Toronto Dominion just bought Mercantile. They're here in Jacksonville now.
Okay. Oh, interesting. So we've got, one of the more interesting ones I think is Compass was bought by this bank in Spain. And Bilbao, Spain, BBVA, which is a really interesting development. And this is all strengthening the ability of these banks to fund good deals when they come in. Now, I'd say a year ago, our problem was a lot of the banks were still broke. If a good deal came in that banker's door, the bank was too broke to make the deal.
Gotcha.
Now the bankers are complaining that we don't see enough good deals. And that's a good sign. The other, we talk about green shoots in the recovery. That's one of the words. One of the green shoots about 3 weeks ago, I had a banker in my office who was looking to hire a good loan officer that understood SBA lending. I said, I haven't had one of these people in 3 years. So.
Well, unfortunately, on that note, we just ran out of time, so I apologize for that. I want to thank you both for being here, and thank you for joining us today. You can get more information at www.sba.gov or from the Small Business Development Center. So thanks for joining us today, and come back next time, and we'll be speaking of business. Bye now.
Thanks, Nancy.
Oh.